Good morning and welcome to the Early Bird, and here we're looking at the Dow Jones on a 1 hour chart. And what I'd like to point out here is that we're looking for this particular rally to finish from wave B here to wave C here, and there's always 5 waves in a wave C, and there's in a wave structure. There's always a beginning, there's a middle and an end, and the middle part is always the strongest and longest, and well, not always the longest. The extension can also happen in the first wave or the fifth wave, but normally with stocks it's in the third wave, and we can see the most powerful point in the structure here. So from this little bit here we can see that little 1, 2, 3, 4 and 5 to that point. So that's the third wave in the middle there. But there's also this structure here as well. So this wave 1 here and wave 2 here that would come in and fit this little one here. So there's still this 3 sort of structures here that we can sort of see here. So we still need the third wave is finished here. The fifth wave here is not finished yet. So it's basically taking this section here and tacking it on to this point from here. So I'm sort of thinking sort of up here. The cash market is trading around 10,320, which is very close to this E-mini contract here. But there is a bit more to come in here. And I was also thinking of the S&P 500 as well. This is also an E-mini as well. But it's the same sort of thing here. So we've got that third wave with 5 waves in it coming into this point here, and that being the center of there. So if this is the actual center here, and this is half of it here, then we'd be looking for the other half here. So this is the closest, largest number up here is 1,100. It's a minor trading level as well. So it's the likely target. So that's what we'll be looking for. Now the problem with this is that we've got payrolls, employment figures coming out tonight in the US, so that's a possibility to cap that top there. So we need to take that into consideration as well. Yeah. Alrighty, and the same with the FTSE really. Let's have a look at this here. The same sort of structure here. We've got this here, of course, but from this point here we've got up for 1, back for 2. We've got the third up to this point here. So we've got the fourth, we've got the fifth coming in. So this is still, all this here is still just this particular structure here. There's this to go here as well. So I would imagine that there would be problems at the 5-4 here in terms of a reaction, and then getting its first high above here, and then having an ABC here, and then sort of pushing up to complete that fifth wave. And that would also be the same for the SPY as well. So on the SPY here, we've got yesterday was the classic sort of Thursday, which is a little bit sort of unexpected because the US is up, so we get that higher opening, and then the market basically trades down for the day, and that's the normal sort of process in a bull market for that. And that's why we look for Thursday afternoon to start scaling into positions to catch the Friday morning up, and if we'll talk about that in a moment. But the volume that was coming down in this on yesterday in stocks like BHP and CBA, they came down, but they came down on low volume. That means that it was just profit taking. All the buyers were in the trend, because when a trend tops out, everybody needs to be in there. That's the reason that it will turn. So once you've got that consensus of around above 90 to 95% of people in the market, then there's no more people in there to push it up, and that's why a market turns. So there was just profit taking there. There's no heavy selling. So support comes in. So on the SPY here, we're looking at 45.50 as being the support here. We're below the level, and now we're above the level. And now we're moving into subgroup 2 here, the 65, 72 and 80. So this is where you'd scale in through these as well. But we're facing old highs here. We'd also be facing old highs at 4,600 as well. And you'll see that on the cash market. So The cash market is still trading around the 4,500 here, but as that pushes up and the Dow tops out and so forth, we'll see it struggle at 4,600 and see a larger correction open to the downside across 4,500. Now that correction across the 4,500, that's where we're looking for the support. I'll just bring that up. Okay, this is the cash market here. This is 4,500 here. That's minor trading level, number 5. And what we're sort of looking for here is we're looking for a little 5 waves up through here, like so. And once that's complete there, we'll be looking for some sort of 3-wave counter trend coming back down through here, like that. And then once that's complete there, then we'll be looking for 5 waves up. And what we're sort of looking for is we're looking for this support to be on here. So we want basically this to move up, top out, come back in a correction, and then find support. This will be where our timing is here. So after the correction, then support, then we move in. So getting in up here can cause this here as well. Where the risk comes in here, this is in 3 waves here, so then we'll get a new high coming through here. So a little bit like this correction coming down here in 3 waves as a corrective pattern, that means it will get a high above here. So, but in saying that, if this market, this little push down here on intraday will be in 5 waves, 3 waves up, 5 waves down. But if this turns into 5 waves coming down through here as such, which is also expected on the Dow, if that comes down through here in 5 waves below the 61.8% down here, then that 5 waves will simply give us a 3-wave correction back up as a counter trend and as a retest of the 45. And then we'll be going down once again from that point, because we got 5 here rather than the 3 here above the 61.8 retracement level from here. So bringing that 61.8 retracement level back from, say, just around that point there. So below that, I've got that upside down, but that 38 is the inverse of that. So below that there. So anyway, that's the risk that that would be sort of looking at, and that's why we need to, because we need probability on our side, so we need to wait. Well, we want to get our timing right as well, but we also want to be looking at safety as well. And this is pretty much the same for BHP and CBA and so forth, that the ones that are moving up through here as well. We need to wait for a retest, because that's what a market does. What market moves up, then profit taking occurs and comes back and see if the buyers come in again. So it's basically, as the trend's moving in a direction, it's coming back and checking until there is no support or one support drops out. And the same with coming down as well. So it moves down, it comes back up and checks supply to see if the sellers are still moving down in the market depth from one level down to the next level, down to the next level. They're chasing the market down, and we've all chased the market. So it's important to get the timing right. Crude as well. So as crude will follow the indices, and as we mentioned down here before, we had sort of 5 large waves coming down through here, and we're looking for an ABC correction. We did have one in here, as mentioned before, but we just thought that, I thought that was just a bit small at the time, and I mentioned it as well. In proportion to this correction here, in proportion to all of that there, it doesn't really seem to balance up, does it? It doesn't have that 60-40 thing, that 61.8, 38.2 sort of natural numbers, natural growth thing. So it's got to have the right sort of perspective and look and feel. But now it's sort of coming into shape a little bit, because this 3-wave correction here can be the A wave, the B wave here, and we're looking for a C wave to come back up through here. Now, it can pull back up 61.8%. So from this high here down to this low here, and that would be your 61.8% up there. So it can possibly do that, right? But also, by the looks of this structure here and what we've got on the Dow Jones and so forth, it looks like this will be just what we call a normal sort of regular flat correction, which would be the A, the B, and the C into this point here. But it also normally pulls back to the 3rd, 4th wave of 1 lesser degree. So that's why I've got those there. So the 76.50 is a sub level halfway between 5 and 8, and yeah, you'll see that on stocks as well, from $5 to $8. So the $6.50 or $16.50, 65 basically it is. So anyway, that's what we'll sort of be looking at there, the 76.50 as a sort of a rough top side figure there, but also looking for 5 waves to finish as a regular flat correction. And there's 3 types of flat corrections, and the expanded, the running, and the regular flat. Right, now gold's gold is doing its sort of normal process. It comes up and hits the level, reacts, and then tries to create the first high above the level. Once it's done that, then it'll have a larger correction across here, and can also fail from this point here, because we'd be looking at the US dollar index finding its low at 82, or 81.80 is the 61.8 retracement level. However, we've got to see if this is going to work out as a hedge. But look, what we're looking for here generally is 5 is the second strongest number. So we would expect some reasonable sort of correction across this level here. So it's going to get a bit sort of choppy, and it's not going to move. It's not going to really sort of take off at any point until the Dow Jones is actually sort of, impulsing to the downside, and it's not doing that at the moment. So it's going to be sticking to this here. So there's not going to be a lot of action on the actual gold stocks unless they're on smaller volume like AND and those sort of things. So yeah, we've got a fair bit to unwind here as the Dow comes in at a top, and the US dollar index finds its low point while the euro finds its high point. So we're basically looking for all of these to come together at a particular point, which is just not just yet. I thought it would have been this Wednesday, Thursday, but and it still may be the Thursday in the US if the employment figures and payroll are not what's expected in the market. It could certainly come in and cause this high in the Dow Jones here. So that's essentially sort of what we're looking for, but that may not come through until sort of late, till maybe even next Wednesday possibly. So let's see how this starts to struggle at this particular point here. The obvious target up through here, there's 3 of them. There's group 1 in here, which is subgroup 1 of 10,300, which is 10,030 there. And then we've got the midpoint at 10,350, and then we've got this group 2 here at 72 and 80, 65, 72 and 80, and that would probably also leave the S&P 500 at pretty close to 1,100, so that's about right there. Our market looking at its old highs, and BHP and CBA coming in at above, say CBA starts to run into real supply at 52, 65, 72 in amongst there, and the same with the other banks as well. So they'll all be running into supply zones, so just be a little bit sort of careful about that. Having said that, if Friday's closing is strong and on solid volume, that would be the key, then there's a likelihood of Monday to follow through. But it's just those unemployment figures that could nail a little bit at 10:30 tonight our time in the US. So yeah, just be a bit aware of that. But good solid volume today on close would see the momentum run through to Monday, and then Tuesday profit taking. So that's something to keep in mind this afternoon. Alrighty, I think that sort of covers it there. Yep. Alrighty, well, good morning and good luck.